Are you worried that your healthcare costs are about to skyrocket in 2026? It is a question on everyone's mind as we navigate a shifting landscape of subsidies, expiration dates, and new policy proposals. If you are feeling the pressure of choosing a plan while balancing a tightening budget, you are definitely not alone. Most Americans are currently agonizing over these exact decisions. Try to figure out which plan fits their medical needs without breaking the bank. The reality is that 2026 is shaping up to be a year of significant transition for Medicare, Medicaid, and the Affordable Care Act. In this video, we are going to break down exactly what is changing, which deadlines you can't afford to miss, and why your monthly premiums might look a lot different than they did last year. The most immediate concern for millions of families is the expected rise in healthcare costs across the board. For several years, Americans have benefited from enhanced Affordable Care Act subsidies that made marketplace insurance significantly more affordable for low- and middle-income households. However, those enhanced credits are set to expire on December 31st, 2025. Unless Congress acts quickly to extend them, marketplace prices could skyrocket. This means that even if you keep the exact same plan you had last year, your out-of-pocket monthly premium could jump simply because the government assistance you relied on has vanished. This change doesn't just affect the unemployed. It hits middle-class families who fall just above the standard poverty line, but still struggle with the rising cost of living. Timing is everything when it comes to securing coverage, and missing a deadline can leave you without insurance for an entire year. For those on Medicare, the December 7th deadline has already passed, and for many ACA marketplace plans, the primary December 15th cutoff is behind us. However, there is still a small window for some to make changes until January 15th for a later coverage start date. If you get your insurance through an employer, your window likely closes in late November or early December. It is vital to remember that these plans are generally locked in for the full calendar year. Unless you experience a major life event like getting married, having a baby, or losing your job, you won't be able to switch your coverage until the next open enrollment cycle in late 2026. Understanding the difference between Medicare and Medicaid is more important than ever as funding structures shift. Medicare remains a primary source of coverage for those 65 and older or those with specific disabilities. It is broken into several parts, including Part A for hospital stays, Part B for doctor visits, and Part D for prescriptions. On the other hand, Medicaid serves low-income households and is strictly income-based. While Medicare is relatively stable, Medicaid is facing potential funding limits under new legislative proposals like the One Big Beautiful Bill Act. Because Medicaid allows for rolling enrollment throughout the year, it remains a safety net for those whose income fluctuates, but the criteria for staying eligible can vary wildly from state to state. When you're looking at your 2026 options, you'll likely see three main types of plans: EPO, PPO, and HMO. Choosing the wrong one can be a very expensive mistake. EPO plans are often the cheapest because they have low premiums, but they are incredibly restrictive. If you see a doctor outside of your narrow network, you might have to pay the entire bill yourself. PPO plans are the most flexible and are usually the best fit for people with chronic conditions who need to see specific specialists, but you'll pay a much higher monthly premium for that freedom. Then there are HMOs, which are common for Medicare Advantage users. They offer low premiums and focus on preventative care, but they require you to stay within a specific network of doctors for almost everything except emergencies. The bottom line for 2026 is that the era of lower, subsidized premiums is under threat. Between the potential end of ACA tax credits and the rising cost of private insurance that employers are passing on to their workers, almost everyone should budget for higher deductibles and premiums. Whether you are navigating the marketplace, relying on government programs, or picking a plan through your job, the key is to act before the final January 15th deadlines pass. Healthcare is becoming more expensive and more complex, but staying informed is the only way to protect your finances and your health. Make sure you double-check your plan's network and premium costs now, so you aren't surprised by a massive bill in February. If you found this breakdown helpful, consider sharing it with someone who is still trying to figure out their 2026 coverage.